Hello everyone, this is Paul Benedict with the Benedict Group at Keller Williams Realty Las Vegas. It's Thursday, January 21st, and this is the first market update that I'm recording in the new year. So I not only have December's numbers to talk about for Las Vegas real estate, but I also have 2020's annual numbers. So this is going to be exciting. Let's go ahead and dive on in. Let's look at some numbers from December and see what the market's been up to and see where it's going. We ended December with a median price of detached houses at $345,000. That's just a tad bit below November's number of $349,000. However, if we look at December over December from 2020 back to 2019, we see that that number of $345,000 is actually up 11% year over year. So that is the appreciation of detached houses in Las Vegas from December of 19 to December of 20. 11% increase. Attached products, condos and townhouses, ended December at 187, and that's 5% above December of 2019. If you lump all property types together in Las Vegas and look at townhouses, condos, and single-family detached houses together, that number is 320,000, and that's a 10% increase from December of 2019. The market's doing well. How many houses are listed for sale? As of this morning when I pulled this number, this is a slightly disturbing fact. This is causing a frenzy in the market. If you look over here on the right, there are only 5,230 properties listed for sale. And now keep in mind, Las Vegas has a population of over 2.2 million people. And with only 5,000 houses listed for sale, that's an extremely low number of inventory. And that's causing multiple offers and bidding wars, and that's creating a shortage of inventory. So we'll talk about what that means. Sales volume is doing well though. So although the prices of houses in Las Vegas was down slightly from November, we sold more. So in December, 3,997 properties sold versus November's 3,649. If we take this number, 3,997, and divide it into how many properties we have listed today, 5,230, we have a nice even 1 month of inventory. So our absorption rate is 1 month. Now what that means is if no new listings came available today and no new properties were listed for sale, how long would it take our market at its current rate of sale to absorb what we currently have? And it's 1 month, and that's extremely low. It's a very strong seller's market. We really need more houses to be listed. If you're a home seller, this is such a good time to list your house for sale. Now I know that if you're going to be buying another house, I know the prices of what you're going to buy are high as well. But you buy in the same market that you sell in, regardless of what the market's doing. If you sell low, you're going to buy low. If you sell high, you're going to buy high. It's very rare when you can sell high and then buy low. It's very difficult to time the market like that. So if you're thinking about selling, this is a great time. There are buyers scrambling over one another to buy houses these days. Out of the properties that sold last month, 20% of them were sold to cash buyers. And you see this number here, 20%. Last month, 19, 19, 18. So now I want to talk about annual. So this is very exciting. At the end of 2020, we closed out the year selling 39,224 units in the whole year, and that's the greater Las Vegas area. I want to draw your attention to 2019's number. 39,495 properties were sold in 2019. Now granted, 39,224 is less than 39,495, but how much less? This is very interesting. So considering the pandemic and considering lockdown and how many people were out of work, the number of houses that we sold last year is less than 1% fewer houses than we sold in 2019, 0.7%. So the pandemic didn't really faze us all that much in terms of Las Vegas sales volume. Imagine that. Interest rates are low, buyers are buying, sellers are selling, but we need more sellers to sell. In terms of sales price, if we take all properties that sold in Las Vegas last year and look at the median price of all of them, we end up with a value of $306,000. And that is up from $284,000 in 2019. Now this is all property types, detached houses, condos, and townhouses. So if we check out the percentage of that, $306,000 represents an 8% annual increase year over year. So from 2019 to 2020, the annual median sales price is 8% up. That's the appreciation of Las Vegas houses. If we break those numbers down by property type, so what I've done here is I have assigned a yellow bar for condos and townhouses, a green bar for detached single-family houses, and a blue bar for the same chart you just saw, all property types. Detached houses ended the whole year at a median value of $330,000, condos and townhouses, $188,000, and all properties, as we just saw, 306. Comparing those numbers to last year, we'll look at percentages. Detached houses were up 8% annually. Condos and townhouses were up 7%. Healthy appreciation considering the pandemic, wouldn't you agree? Now I'd like you to look at something else here that's kind of fun to do. I went back to 1990 and I discovered that the median sales price of a house in Vegas in 1990 was $104,000. So I wanted to understand what an average pricing increase of 4% a year would look like from 1990 to today. So I took 1990's number of 104 and I increased that by 4% every year. And at the end of 2020, that would give us a value of $338,000. So this is just the long-term trend. And of course, at the end of 2021, that's what this column would be, $352,000. Now, how did Las Vegas prices actually perform? Here we go. This is the overlay. You notice that in 2004, 5, 6, and 7, we had a very big appreciation bump, a bubble, then a crash, of course, 2008, we free fell. And then from 2011 and 12 to today, we've been increasing very steadily and healthfully to a value of $306,000. But had we never appreciated and crashed here, this is what the trend line says we should be at, considering 4% being an average annual appreciation. So we're under where we quote unquote should be. Now this is just, this is just something to think about and consider. Not saying that our market has to have appreciated at 4%. So what would it be if we used a 3% number from 1990 to today? Let's look at that. Well, we would have eclipsed that back in 2018. 306,000 would be quite a bit above 252. However, Las Vegas prices certainly didn't appreciate by 3% every year since 1990. Some years we appreciated less and some we did more. The point I'm making is that we're not in a bubble. There's no bubble, my opinion. The last thing that I want to say here is, if you believe that prices are going to crash this summer because of, unemployment and the moratoriums being lifted on homeowners not having to pay their mortgage and unemployment rates and such, consider this. We talked earlier today about there only being 5,000 houses listed for sale and there only being 1 month of inventory based on 4,000 houses selling last month. Couldn't we stand to absorb more houses? So let's say a lot of these homeowners who can't pay their payments, let's say the moratoriums end and they're forced to either sell their house or start paying their payment again. Well, if I can't pay my payment, I'm going to sell my house. Now you might be thinking, well, they will foreclose. Why would they foreclose when there's so much equity in Las Vegas houses? Most homeowners have significant amount of equity, and therefore, why would they foreclose when they can just sell? So let's just say that another 5,000 houses came on the market. So that's 10,000 houses. Well, that would give us a more healthy balance of buyers and sellers, because right now we're way out of whack, way more buyers than there are sellers. That's why every house that's decent, under 400,000, has multiple offers. So we could use a lot more houses for sale. Also, banks are only controlling 2,400 properties right now. So I get this data from our title company, and some of my customers have told me, Paul, banks are holding foreclosures and they're going to release them all. Well, no. The fact of the matter is banks are holding about 2,400 properties that they have foreclosed, and they're going through various stages of title fixes, property fixes, and such, and then they'll sell them. But again, that's only 2,400, and even if all 2,400 came on the market immediately, which they won't, that's still barely getting us slightly out of this strong seller's market realm. We need more houses to be listed. So if you're considering selling, let's chat about it. I'll do some comps for you. Let me put my 17 years of real estate experience to work for you. It's a great time to sell a house. And if you're a buyer, the interest rates are under 3%. That's never happened in the history of rates in America. Never. So buying a house is attractive as well. I'd love to help you understand the benefits of making a move in this market. Paul Benedict signing off, Keller Williams Realty and the Benedict Group. I look forward to seeing you next month. I'll give you another update when we have some more numbers to share. Have a great day, great weekend, and let's all prosper.